what could be called as a very strong agri-inflation in the country. Agri-inflation has two parts. One, it automatically means more money in the hand of farmers. But it also means that the impact of inflation is something which would be indirectly felt. Rural India is already going through a big slowdown, even though select agri crops have been opened up for exports now, courtesy what's happening on the war front. Are we in for a revival in the rural demand stroke income because of the uptick in agrarian prices, or this is something which is going to create a bigger problem, which is that a structural inflation will start? Dr. Sachchidanand Shukla, Chief Economist with Mahindra and Mahindra, joins us now, and let's take that conversation forward. We are also joined by Mr. Siraj Hussain, former Union Agricultural Secretary and visiting Senior Fellow at ICRIER. Gentlemen, good morning to both of you, and thank you for joining us. Mr. Shukla, inflation, when it came back initially, my first reaction was, thank God, it's going to boost up the farm income, the rural income. We've been crying for uptick in rural income, but that was not happening, but that has happened. But are we reaching that point where this uptick now could call a structural problem in inflation, the word mehengai, which all of us dread?
So thank you for framing it like that. I think we are in a phase where there are better realizations for farmers. And what has happened fundamentally is that domestic demand supply balance has tilted in favor of producers, which is the farmers. And then we also understand that they are consumers. But there are many facets to the inflation story that we are seeing worldwide, right? It is primarily being driven by energy and oil prices. And there is the added facet, which is agflation or agricultural inflation. If I look at the FAO food index, it has been rising dramatically, especially if I look at just the March numbers. There has been a dramatic rise in the index number. But having said that, I think there are multiple things that we need to look at from the Indian consumer point of view. How does the government really use the policy levers that it has in terms of trying to balance it out, both for producers versus consumers? And there is fiscal policy and monetary policy. On the fiscal side, how does the government crank up its levers in terms of spending on the farm side, on the rural side? And that can probably put more incomes, more stable incomes via infra creation. And that is not really going to add to the inflation that you're seeing. But at the same time, you also have monetary policy levers where most people now expect, just like elsewhere in the world, that the RBI is also likely to raise interest rates going forward. And that should have a dampening impact on inflation overall. So I think we are in for a very, very interesting phase of seesaw, where the balance will tilt from producers to consumers over a period of time. Now, how well this is done, how well the government utilizes its policy levers, is going to determine the overall impact on inflation that you and I or others will feel as consumers. Back to you.
Fair point. I'm just going to read a chart which talks about how much agriculture prices have gone higher, and this is a data which has been outsourced from Prabhudas Leeladhar. Mr. Hussain, farmers are happy, everybody is happy. Are we in that phase where right now the farmer is happy and excited?
I think after a gap of several years, farmers are realizing better prices for their crops. Generally speaking, the prices of almost all the crops are higher, except for chana, which is an irony because the government banned future trading in chana in October, though prices even at that time were lower than the MSP, and that decision has not been revised. So I would say that most of the crops are realizing better prices. So in that sense, farmers would be earning a higher income.
Good morning, Mr. Sachchidanand Shukla. This is Nayantara, who's also joining in. Now, what we've also seen in recent times, inflation, thanks to the Russian-Ukrainian war, has led to shortages, right? Whether it is of edible oils, we've also seen what's happening with wheat globally. Is this an opportunity for India? India has, of course, been talking about increasing its exports. Recent times, we even saw that big trade pact with Australia.
Absolutely, Nayantara. I think what we are in the midst of is the agri-export boom cycle. Typically, these cycles last just about anywhere between 2.5 to 3 years. We've already seen 2 years of buoyant exports. As you know, agri exports rose by about 20% in FY22, and that was primarily led by wheat, rice, and dairy products. And this obviously implies better realizations for farmers, etc., which we've just spoken about. I think one thing that I want to highlight is if you look at India's share of global wheat production, we produce nearly 13.5-14% of global wheat output, right? But the share in exports, wheat exports that India has is just about 1.3%. And there is a huge opportunity over there. Let me compare or contrast this with rice, for example. There, the share in output is, say, 24%, but we export about 32-33%. And therefore, this opportunity that we have in terms of wheat especially is a huge one. And hopefully, we will be able to capitalize on it. And this will mean higher realizations for farmers. And as you know, there are about 5 states which primarily account for wheat production, and you should see a feel good and high realizations for these farmers in these particular states. And I think more importantly, Nayantara, I think for India, food export is a dire necessity, right? This is not merely an opportunity-driven initiative. We know that grain coffers are overflowing and we have a problem of plenty, and this will help bring down the stock holding to some manageable levels, and that also means savings on the food subsidy burden. So this is a golden opportunity from the much needed, from this crisis. And we should probably benefit not just in terms of higher farmer realizations, but also some savings on the MSP and the entire issue that we have with the subsidy burden, etc. So I think this is a golden opportunity for us, and hopefully we will capitalize. And the war in Russia, Ukraine probably extends the global cycle by maybe another year, 6 months or a year, and that augurs well for us. Back to you.
In fact, if you look at the Indian agricultural exports in the financial year gone by, higher by 20%, crossing $50 billion for the first time ever. And of course, all of this is going to benefit farmers, which is why we're having this conversation and the impact on the rural economy. So with that, Siraj said, if I can come to you, a golden opportunity for India. Yes, we've hit $50 billion, but going forward, and we've seen what's happened in the past with the agricultural bills, the farm bills, all of that. The focus of the government, it'll have to be on food security, and it'll have to continue to subsidize if we're going to be such a serious exporter. How will it work?
The government has already continued the additional allocations under Pradhan Mantri Yojana for 6 months. My take is different from Mr. Shukla's, and I have written about it with Shweta Saini, which will be published tomorrow in the print. My sense is that in case of wheat, there is production loss due to higher temperatures in March, even though the government is not acknowledging that. And therefore, in many states, wheat procurement is much lower than last year. In Madhya Pradesh, it is 50% of last year. In UP, it is just about 10 to 15% of last year. Even in Haryana, it is much lower than last year. So I think there is some concern about which we have written. It will be out tomorrow, so we can have a look at that. You see, our surpluses are marginal, and therefore, from time to time, we have to import food commodities. So we should remember that the surpluses which excite many people are basically due to low purchasing power and good monsoon in certain years, etc. This year's monsoon is also, there is some concern. So I think the government will be factoring these considerations, and going forward, I think we will see some decision on the export commitments and on the promotion of exports.
We've been trying different kind of measures. I remember the Happy Banana Train, which was taking bananas to the AJNPT for exports. We've seen it with mangoes, the thrust that has also been given as far as sugar, despite the glut in the market. Sachchidanand, our final comments that's coming in. At a time when food inflation is also up, yes, rural income is likely to go up as well. But this is a government that will also be looking at reining in inflation while having the right price for the export market. It's an unenviable task. So just taking forward from what Mr. Siraj Hussain was also talking about, having differing views, how do you see this panning out?
Absolutely. I think this is a very, very delicate balancing act that the RBI and the policymakers have to do, right? You have to maintain a balance between producers and consumers. You have to leave enough juice for the producers. In this case, it is farmers. You have to have enough incentives in terms of price so that they are able to produce and get higher realizations. And at the same time, from a consumer perspective, it's very clear that RBI now has a mandate to target CPI inflation in a particular range, and it will have to react to some of these data points. But like I mentioned earlier, this inflationary bout that we're seeing is not only about agflation. It is also coming in from other commodities which we import. So the imported inflation component, largely energy prices, largely crude prices, and food is adding to that. So I think we will have to look at how the government really uses the fiscal policy levers. For example, what they can do is they can subsidize fertilizers and the fertilizer and the diesel bill, which they have done in the past whenever crude oil prices have gone up dramatically. At the same time, we have seen last year of bulk of the incremental spending that the government did went to fertilizer subsidies and also bringing down import duties on edible oils, right? So that is something that they can use from a fiscal policy lever. On the monetary policy side, it could be a blunt measure like going in for rate hikes going forward. And that will need to be calibrated with the realities of how much demand is destructing, right? Or how much we need to recalibrate so that growth doesn't really crater. So I think this is a very, very delicate phase where the fiscal and the monetary policy will have to take into account leaving enough juice for farmers in terms of not really jeopardizing this export opportunity and then doing whatever is required to capitalize on that. And at the same time, not really impacting demand by way of very high inflation, which is largely energy, crude, and some of these imported commodities. So it's a very, very unenviable sort of task that policymakers have.
With that, I'd like to thank both gentlemen for joining us here live on ET Now. This is a government which is committed to doubling farmer income. When you do have inflation, one of the beneficiaries is always farmers, as long as they're able to enjoy the higher prices as well. India can take advantage of the global food supply disruptions. We crossed $50 billion in exports last year. It was a big, big milestone. Let's see how this pans out.